Hi guys, my name is Muhammad Aslam. Today I am going to discuss about management decision affect share prices. We will discuss with the major factor affecting share prices. The first one is economic shocks. Another one we can discuss business environment, the economy, and also we will discuss about affected cash flows. The first one is economic shocks. War. During this time, nations become together, and in this form of level, the companies and the business get invest in the domestic level. Natural disaster. This is the external factor, and this is constantly changing, and the companies and also the management should make a decision, should make a strategy like accordingly about the changing of the natural disaster. Business environment. The business environment, corporate laws. Corporate law is an important because it's defined the formal rule that drive behavior. The process of illegal the process of legal incorporation bring a business entity into existence. Environmental regulation. Companies put limitation on the ability of manager to make the decision that harm the interest of shareholder. Business environment, procedural and safety regulation. The law and regulations that companies make the rule to decide the limitation of the manager to make the decision that harm the interest of shareholder. An example, federal and state make it illegal for manager to steal corporate asset. Tax. The Department of Environment has responsibility for a number of administrative arrangements about about the taxation, like the concession of the tax, and they can seek to protect the natural environment. The company's line of business. And line of business is a general term that describes the products or services offered by a manufacturer or a business. Like we can say that what the product and services the manufacturer is offering to their customer, to their consumer. Financial management decision. Financial management decision is important in the process of cash flow. The financial manager is responsible for making decisions that are in the best interest of the business owner, whether it is start with a single owner or a billion-dollar company owned by the thousands of shareholders. Capital budgeting. The capital budgeting is a technique. The management should have the good skill in capital budgeting. The capital budgeting is a process that lead to the company how to manage the budget. The capital budgeting decision process address which productive asset the company should purchase and how much money the company can afford to spend. Financing the company. The company is financed with the debit and equity affect the value of company. The financial manager goal to determine the combination of debit and equity that minimize the cost of financing the company. The manager goal is that he can understand the debit and equity and what is going to the company and how can company spend for the next project. We can say that if the company want to build another per, launch another product, but the manager should have to responsible to look what is the financial regulation about the new product. Working capital management. Management must decide how to manage the company current asset such as cash, inventory and account receivable and it is current liabilities such as trade credit and account payable. Product quality and cost. Manager and also the whole management is responsible to manage the to maintain the product quality and keep focus on cost as low as possible, like they can pay the low wages and also they minimize advertising campaign. They can reduce their productive cost. Through this they can sell out to their customer for minimize cost and the customer is happy to get it little bit low cost. Marketing and sale. The management and also the manager have good skill about marketing and sale. Through this the company can invest for the new product and they can launch a new product because they have a good management team that have a good sales skill and also the good marketing skill. If they have a good marketing skill they can easily market their product and from marketing they can get a sale of their product and also they earn money from that product. Research and development. It is the important part, I guess. The company should invest in research and development for a new product. These decisions affect cash flow over the long term, such as the decision to build a new plant. The economy. In the economy, the first one is level of economic activities. Economics says that there are four basic type of economic activities. The first one is primary sector, like we can say that raw material. The second one is secondary sector. We can easily we can say that include industry and manufacturing, and also the third one is tertiary sector like services that the manufacturer offer to their customer. Level of interest rate. The interest rate is the amount a lender charges for the use of asset expressed as a percentage of the principal. The interest rate is typically noted on an annual basis known as annual percentage rate. Consumer sentiment. The consumer sentiment is the indicator of economic. Like we can measure that how the consumer are positive feeling about our product and about their financing and the state of economy. Expected cash flow. In expected cash flow, we need to discuss about magnitude. Magnitude is that how to manage the cash flow from starting to time by time. Timing. Timing is so important in the affected cash flow. Like a person, like we can say that a dollar today worth is more than a dollar in future, because if the person have some dollar today, he can invest it and also he can earn interest. It is affected cash flow, because if we invest the money, then we can earn the interest. If we don't invest money anywhere, no one can earn from without money. Risk. Risk can be defined as the extent to which future cash flow may fall short of expectations as a consequence of changes in market variable. Investors don't like risk. Most of the investors want to try to find these type of companies they have minimize risk. Share price. In share price, we have two different factors. The first one is external factor. The external factors that affect the company's share price are economic shocks such as natural disaster, war, the state of economy such as level of interest rate, the business environment like we can say that tax regulation. On the other hand, we have internal factor affect the share price can be controlled by the management. Thank you so much guys, I hope you will understand